So, Taylor, we've talked about how filing a return can be beneficial even if you're below the income threshold, especially if you qualify for refundable credits like the EITC. Now, let's shift gears to another special circumstance, a situation many of us will face eventually: filing taxes for a deceased loved one. This can be a difficult time emotionally and practically. Someone recently passed away. Beyond the grief, there are legal and financial matters to handle, including taxes. So let's unpack the tax filing responsibilities for a deceased person's estate. Sam, can you help us understand this? To start us off, who is responsible for filing the final return for a deceased person?
That responsibility typically falls to the executor of the estate. If the deceased didn't have a will naming an executor, the court will appoint an administrator who takes on similar responsibilities.
So, if I understand correctly, the executor or administrator, if there isn't a will, is in charge of handling the deceased person's taxes. That makes sense. But what if the person wasn't really wealthy or didn't have complex finances? Is filing still necessary?
Yes, filing is often still necessary even if the estate is small. Similar to what we discussed earlier, if the deceased's income during the year they passed away met the filing threshold for their filing status, a final return must be filed. This return covers income earned from January 1st of that year up until their date of death.
That's a really crucial point. It's not about the estate's value, but the income earned during their final year. Sam, what about deadlines and necessary documentation?
The filing deadline is generally the same as the regular tax deadline, typically April 15th of the following year. However, an automatic 6-month extension can usually be requested, moving the deadline to October 15th. As for documentation, you'll need the deceased person's Social Security number, records of their income W-2s, 1099s, etc., and any records related to deductions or credits they were eligible for.
This reminds me of what we discussed about record keeping in episode 42 of our main podcast, Safe, Simple, Sound. It seems even more critical in this situation, especially if you're the one handling the affairs of a loved one who has passed. Imagine trying to gather all this information without proper records.
Exactly, Taylor. Good organization makes this process significantly easier. It's also worth noting, as our reference article mentions, that there are additional special rules for unique situations, like if the deceased was a U.S. citizen living abroad.
Right? And those details can get quite complex, which underscores the importance of seeking professional guidance.
So let's recap. If someone passes away, the executor or administrator of the estate is responsible for filing their final tax return if the deceased met the income filing requirements for that year. The deadline is usually April 15th, but can be extended to October 15th. Crucial documentation includes the deceased's Social Security number, income records, and records of deductions or credits. This can be a challenging process, so seeking guidance from a tax professional or directly from the IRS is highly recommended. Navigating these responsibilities can be easier with expert advice.